Okay, good morning. My name is Alexander. Today is Thursday, February 18th, 2021, and this is my catch-up series for today. So today I'll be going over the volatility index 75, but let's see what we went over last week on CHF JPY. So CHF JPY last week I said a break of this level. Hold on, give me a second. On CHF JPY last week, I said a break of this level will see a downfall, and a break of this level or this level will see a rise to the upside, and which is exactly what we saw. So we saw a break of this level, a retest, some type of consolidation, a push to the upside, which is some type of bullish engulfing. Off of this whole level here, you saw profits, you saw drawdown, but if you had entered here with your stop loss below structure, this is based off of this structure 10 plus 7, so that would be about 11750. 11750. You saw profit, drawdown, profit, drawdown, and from there on, this is what you saw. You saw a profit potential of about 109 pips from an 18 pip stop loss just by being patient and sticking to your buyers, and that's that for that. You can see how it played out like this. You can see how it played out with an 18 pip stop loss. You got over almost 100, 1:10. Yeah, that's about 1:10 risk to reward. All right, so that's that. So a recap of what I went over last week for volatility index 75. I said we had some type of structure here. We had some type of first touch to this level, and what we expected was some type of rejection from that level back to the upside, and which was what we saw. We saw a push, a second pass to the low, which gives us a double bottom, a bullish engulfing. After this bullish engulfing, which gave some type of breaking structure on lower time frame, what we expected was some type of retest, a break of structure on lower time frame, a retest, and for an entry. So this is what we saw: a break, a retest, bullish engulfing, and we entered with stop loss below structure. And you can see how the market moved. The market, you reached about this is 43, this is 32, which is about 110 pips, which is about 1,100 points. You reached 110 pips for a profit potential of about almost 1,040. This is 43, 253, that's 163, 273, 383, 493, 500, 03, that is 600, 13, 700, 3, 800, almost 900 pips. So this is about 870 or 880 pips movement from 110 pip risk. So that's a wholesome amount of pips that you got. All right, so we got to this level, we saw structure, and there was reason on why we could enter more positions. And regardless of why it was going up, we knew where we were based off of structure on the higher time frame. We're in a bearish market, and as such, we should be looking at taking the bearish move when it presented itself based off of this Fibonacci. So we saw market get to that level and some type of rejection, um, a bearish engulfing, um, buyer's exhaustion up top, buyer's exhaustion, bearish engulfing, and you can go on lower time frame. That bearish engulfing is some type of breaking structure, but you needed more confirmation before you could enter. So that bearish engulfing was closed some type of bearish engulfing around here, but it broke only the top structure. What we needed was this structure to be broken. We see it break, reject, come back to that level, but not to that level. And we saw a rejection off of that level and a bearish engulfing. And an entry off of that area gave about 200 pip, almost 200 pip risk. And from there on, you see that you're floating about over 400 pip profit right now. And what we expect of VIX is this for today and for the rest of the week till my next catch up. Let's see. We are still in a bearish market, but you can see this. You can see this inside bar formation. It might signify some type of bullish rejection off of that level for the market to give some type of lower high formation before it continues to the downside. Or on lower time frame, a break of certain levels. All right, so we see lower high, lower low, lower high, lower low, lower high. So you might want to risk this and take the sell off of this area. You might want to risk it and take the sell off of that area to the downside with stop loss above these levels, this level or this level, depending on your trading plan or your trading methodology. So that's that for that. So we might see a good entry would be a break of this level here, a break of this level, a retest, and a continuation to the downside. So a break of this level and a retest for a continuation to the downside, or a break of this level, a retest, and a continuation to the upside. All right, so that's that for volatility index 775. So let's go to Forex and see a little bit of what's going on. For AUD USD. I've not had any good entry, but this is what I see. It might be bearish, it might come down, but um, the only time I will be a confirmed bear is a break of this level, a retest, and a continuation to the downside. Or price might just continue the rally to the upside. So that is the end of my catch-up series. Don't forget to like the video, subscribe, share, and follow us on all social platforms. Follow us on Twitter and Instagram, Traders of NG, Yusha Mindset, and King ALXNDA. On Twitter also, Traders of NG, Yusha Mindset, King ALXNDA, and I'll see you guys in the next video. Take care. Bye bye.